I sincerely believe that 30 years from now, I will look back at this moment and be like, I'm glad I bought QQQ. Ladies and gentlemen, all major indices, including the Nasdaq, including the Dow Jones, and including the S&P 500, are all down big. Now, I know that there are a lot of you panicking, but it's times like this that you want to go shopping. Over the past month, the Nasdaq 100 is down over 11%. In fact, more than 90 of the tech-heavy Nasdaq 100 stocks are falling, and it's all being led by Facebook, aka Meta. For those of you that may not follow the stock market on a day-to-day basis, Meta Platforms, aka Facebook, is down over 26%, and as it stands right now, it's on pace for its biggest one-day drop since it went public in 2012. And Meta's drop in profits was mainly driven by its metaverse spending and a drop in revenue in its advertising business, which it says is primarily due to Apple's privacy push, which really disrupts the mechanics of how Facebook distributes its mobile ads. But Meta Platforms, aka Facebook, is not alone. Stocks like Amazon, Etsy, Pinterest, Twitter, Nvidia, Snap, Spotify are all also feeling the pain, and all of these stocks are down, and in some cases, these stocks are down more than 10%. And it's times like these when people are panicking, and every business news platform like CNBC, Bloomberg, or the Wall Street Journal is really highlighting this negative news. And this negative news really impacts our psychology, and what I've noticed is that people generally fall into one of two buckets. Either you look at this correction and this slide and you hit the panic button and you start hitting that sell button, and I can tell you from experience, this isn't a good strategy. At the end of the day, ladies and gentlemen, I want you to get in the mindset of not trying to time the market, because I've tried to time the market in the past when we've had dips like this and try to sell everything to try to, get in at a better price point. And trust me, it just doesn't work. And history, the data, and the research shows that if you just hold on to your stocks, you're better off than trying to time the market. So that's the first bucket of people that I see, the people who panic and try to hit that sell button and try to get rid of all of their stocks as soon as possible, as soon as they see some negative news or a market downturn like we're experiencing right now. For me, I try to look at these market slides or these market corrections as a buying opportunity. Now, it's really taken a lot of time for me to get into this mindset, but now I look at these, panic situations as buying opportunities, and that's why I'm going to be buying the hard-hit Nasdaq 100 index. Particularly, I'm going to be adding to my position in QQQ, which is an ETF that tracks the Nasdaq 100. And if you follow this channel, I'm actually going to be buying QQQM, which is essentially QQQ, but it's cheaper. Now, I actually came across this article earlier today, and it's titled "Stocks Fall as Disappointing Meta Profit Weighs on Tech." And this chart really showcases the damage that has been done on the market just today. So we got February 3rd, Meta Platforms down roughly 25% actually. Spotify down roughly 20%, 22% at certain times during the day. Twitter down 10%, give or take. Amazon down 7%, give or take. And the Nasdaq index down 2%, give or take. My point is that technology stocks, and these aren't just any old technology stocks, these are some of the best known names on the planet and some of the most high quality companies on the planet. My point is that right now is a great time to buy into some of these technology stocks, leveraging a product like Invesco QQQ, more specifically QQQM, because it has a lower expense ratio. And here's QQQM's homepage on the Invesco website. And as you can see, the top 10 holdings are companies like Apple, Microsoft, Nvidia, Adobe, Broadcom, Cisco, Qualcomm, Intel, Texas Instruments, Intuit, PayPal, AMD. You get my point. These companies have been some of the hardest hit, and that's why I want to use this as a buying opportunity. And for me, the one strategy that I really like using is dollar cost averaging. And for those of you that don't know what dollar cost averaging is, let's just say that I have, hypothetically, let's say I have $10,000 and the market's down, the Nasdaq's down 2.5%. Now, instead of taking that entire $10,000 and dumping it into the market just today, I will break it up into pieces. So I could say, all right, I'm going to invest $2,000 today, $2,000 next week, $2,000 the following week, and so on until I've fully allocated that full $10,000. And as far as dollar cost averaging goes, you don't need to do it over 4 periods or 10 periods. You could do over 20 periods or 30 periods. You could buy in every single day or you could buy in every single week. It really doesn't matter. It's just dollar cost averaging. And I'm not here to tell you or argue that dollar cost averaging is the best way to buy into an index or to buy into the market or a particular stock, but it's just what works for me. So much of buying stocks or index funds or ETFs is about psychology. And for me, it gives me a lot of comfort dollar cost averaging because regardless of which way the market moves, I feel comfortable. So let's say I allocate $2,500 of my $10,000 today, and let's say that tomorrow or next week, the market tumbles another 2.5%, 3%. Well, for me, I know that for me is another buying opportunity. And on the contrary, if the market goes up tomorrow or next week, I know that I have some exposure to the market because I bought it yesterday. And if the market trends upward tomorrow or over the next week, or over the next month, it gives me comfort knowing that I at least allocated $2,500 of my $10,000 and I bought the bottom of the market. So for me, it's kind of a win-win situation. But just to make it clear, this is not financial advice. This is just how I plan on playing the market. But please do your own research and your own due diligence. Now, I want to take you guys to an article on Seeking Alpha that was published on January 11th, 2022. So give or take 3 weeks ago. And this whole article talks about where the Nasdaq 100 stood at that time and where it stands going into earnings season. And if we read the summary of this article, it kind of reiterates what I've been saying. QQQ and QQQM are two options investors have for tracking the Nasdaq 100 index. QQQ is the more popular with $206 billion in AUM, but QQQM is 0.05% per year cheaper. But one of the things I want to highlight is this bullet point right here. Now it says the Nasdaq 100 as of January 11th currently has a forward price earnings ratio of 35.37, or roughly 6 points higher than the S&P 500 index using a simple weighted average method. And one thing that really stood out to me when I was reading this article about 3 weeks ago was that it said the bottom line is that although the Nasdaq 100 companies are among the most profitable in the world, a better entry point will likely come after the next earnings season concludes. So be patient and lean a little toward value in the meantime. And what do you know? The author of this article was correct because earnings season is upon us and we are seeing a much better time to buy into the Nasdaq 100 right now. Now look, we don't know. Maybe the Nasdaq 100 will fall down further over the next day, over the next week, over the next month. I don't know. Nobody knows. You have bearish people, you have bullish people. It's hard to tell. But one thing I can tell you is that today is a better time to buy than yesterday. And I can tell you that today is a better time to buy than 30 days ago. And as someone who loves index funds, I also think that right now is a great time to buy an S&P 500 index fund like VOO or a total stock market index fund like VTI. But particularly, I think that this is a great time to buy the tech-heavy Nasdaq 100 in the form of QQQM, which is an ETF offered by Invesco. And one thing that I want to make clear is that I'm not a short-term investor. I'm a long-term investor. So I'm not just telling you guys, hey, buy the Nasdaq 100 today and flip it on Friday or next week. No, I mean, this is something that I strategically want to do over the course of my life, essentially. I'm buying QQQ right now to hold it for 5, 10, 15, 20, 25 years. I'm not looking to buy it right now and sell on Friday. And anytime I invest, I try to have a very long-term outlook. And I sincerely believe that 30 years from now, I will look back at this moment and be like, I'm glad I bought QQQ, or I'm glad I bought VOO. I'm glad I bought these index funds at that time because that was a great dip. And that's kind of what you want to do with long-term investing. The market's on sale right now, ladies and gentlemen, so don't forget that. So I really wanted to make this video because all of the headlines are going to be talking about Facebook stock and all of these stocks that are crashing and how the market is selling off. But that's what draws attention and that's what gets views to these outlets and all of these media companies. Now, will the market continue its downslide? Possibly. No one really knows. There's a bull case and there's a bear case. But for me, I look at things objectively and I look at this dip as a buying opportunity. And if the market slides more, I'll buy more. And that's why I love dollar cost averaging. Well, ladies and gentlemen, I really wanted to make this video to reiterate that when the market has a downturn or a sell-off like we're going through right now, I want you to look at this as a buying opportunity, not as an opportunity to hit that panic sell button. I mean, we've got so many macroeconomic factors happening. We've got rising interest rates. We've got kind of hawkish central banks around the world. But aside that, we always have to look at the dips and we have to look at them objectively and we have to look at the long term, 20, 30, 40 years from now. Will we look at this moment like, oh, it was a buying opportunity? Or was this like, oh my gosh, this is the start of the biggest crash in the world? I don't know. Nobody knows. But I do look at dollar cost averaging as an effective tool. So even if the market does continue to slide further, I've allocated over the next week or month that I will continue to buy the dip. And if the market increases, I may continue to buy the bull run as well. But either way, that aside, I want you guys to start looking at this as a buying opportunity. And with that, I'm going to call it a video, and please remember that this is not financial advice. This is just my opinion, and I really just wanted to try to inspire you all, and I know many of you may be feeling really panicked and really nervous right now, but I want you all to do your own due diligence and your own, research. This video is intended to be a part of that research and that due diligence, but good luck to you all. Thank you all for watching. I'll catch you all next time. If you haven't already, please remember to like this video and hit that subscribe button. Thank you all for watching. See you later.